Hi students. So this lecture for BBA second sem on corporate accounting. So in the last class we discussed on theoretical part of the valuation of the goodwill as well as the methods of the goodwill. Okay. So there are two methods are there of the goodwill for the valuation. So which are those two methods? First one is a valuation based on the net assets approach and the valuation based on the profitability approach. Okay, so these are the two mains what the methods are theirs. Okay, so first one is a valuation based on net asset approach. It is one method is there, and in the profitability methods again there are so many, it includes the methods. Okay, so in that whatever is there, so we will see one by one. Okay, so now see first one, which is the valuation based on net asset approach. So it means what? The goodwill under this approach is the amount of difference between purchase consideration and the value of the net assets. Okay, so this is the meaning of the valuation based on the net asset approach. It means what doing by net asset approach? So whatever the difference is getting, it means what's the purchase consideration and what's the net assets. Okay, you know already, you know the whatever purchase consideration. Okay, so purchase consideration means what's the transferee company, what's the transferee company is payable to the transferor company is nothing but the purchase consideration. Okay, is nothing but the purchase consideration. So it transferee company paying to the transferor company. Okay, so this is the purchase consideration. So now how to calculate the goodwill under this net asset approach in this method? So what's the formula? Just see a formula is there. Goodwill is equal to purchase price minus value of net assets. Okay, purchase price minus value of net assets. Okay, so now with the help of this formula we have to solve the problems on the valuation based on the was net asset approach. Okay, so now see, M company limited purchased the business of S company. Okay, what's the M company limited purchased the business of S company. Okay, so now see, S company is the transferor company and the M company is the transferee company. Okay, M company limited purchased the business of S company. Okay, so M limited, it's a M limited, it's the purchased company, and this S company is the transferor company. Okay, so now see, which was having tangible assets of rupees 25 lakh. Okay, so what's how many rupees? 25 2 lakh 50,000, sorry, 2 lakh 50,000, and liabilities of rupees 75,000. Okay, so M Company Limited agreed to discharge the purchase price of the issue of 2,500 equity shares of rupees 100 each at a premium of 10%. Okay, so now see, in this S company limited, M company is purchasing S company limited. Okay, and so in this S company limited is having the 2,50,000 assets as well as the 75,000 liabilities. Okay, and this M company is going to take the business of S limited, which means what? They are purchasing 2,500 equity shares and each share price is rupees 100. They are going to ready to pay plus premium 10%. Okay, so it means 10% we have to calculate on this 100, you will get that rupees 10. Okay, so it means what's the total each price of the each share price is rupees 110. Okay, it will be the 110. Okay, so this is the meaning of this problem. So now first of all we have to ascertain the purchase consideration, because what's the formula under this net asset approach? The purchase price minus value of net assets. What's the purchase price minus the value of net assets? This is the formula, right? Okay, so now first of all we should know the purchase price. Now see how to calculate the purchase price. So it's in M limited is going to issue how many shares? 2,500 shares. Okay, and each share price rupees 100 plus the premium. Okay, so now see here, calculation of purchase consideration 2,500 equity shares of rupees 100 each, it's a 2,50,000. Okay, so plus premium, plus you have to add this 10% premium, otherwise you can calculate the directly. How it's directly calculate? 2,500 equity shares of rupees 100 each, no? So on this 100, you again you have to calculate the 10%. What's the premium? It will be the 110. Okay, it will be the 110. So 2,500 into 110, you will get the 2,75,000. Otherwise do like this. Okay, first of all take the as it is the fair par values. Okay, so 2,500 equity shares of rupees 100 each is equal to 2,50,000. Add it premium 10% on this 2,50,000. 2,50,000 into 10%, it will be the 25,000. Okay, so 2,50,000 plus 25,000 is equal to 2,75,000. So this is nothing but the purchase consideration. Okay, so this is the purchase consideration. Okay, so now what's the formula? Purchase price minus the value of net assets. Okay, and you know how to calculate the net assets. Okay, the total assets minus the outside liabilities, you will get the net assets. Okay, and what is the total assets? 2,50,000 are the total assets and 75,000 is the liabilities. Okay, so now it means what? We have to minus from the assets the 75,000. Okay, so this is the purchase consideration is the 2,75,000 less value of net assets. It means the minus net assets, and the net assets, see how many rupees? 2,50,000 minus 75,000. The net assets will be the 1,75,000. Okay, what's the 1,75,000? So now calculate the value of goodwill. So how to calculate the value of goodwill? 2,75,000 minus 1,75,000. The remaining value is nothing but the value of goodwill. Okay, is nothing but the value of goodwill. So in this problem we got the value of goodwill is the 1 lakh. Okay, so it's very easy. Like this it will come for the 2 marks question as well as it will come for the 5 marks question. Okay, it's very important, but you should know the formulas. Okay, in the very so many formulas are there for calculation of for valuation of the goodwill. Okay, but it's very easy to calculate the value of goodwill. Okay, and you know the word by goodwill, it is in the intangible fixed assets. It is a reputation for the business. Okay, and it's earning the more profit with the help of the companies or businesses earning more profit with the help of this goodwill. Okay, so just try to understand. In the next class we will see the second method, which is the valuation based on the profitability approach. Again in that there are three approaches are there. Okay, average method. Okay, so in capitalization. Okay, so like this there are three methods are there in this average method. Again there are two methods are there, simple average method. Okay, like this are there. So in this next class we will see the problems on the what's the valuation based on the profitability approach. Okay, I hope you will be the understand. So thank you.